Hi there, Peter. I also think it's fair to say that perhaps Aramco will be looming large over the upcoming OPEC meeting in December as well. Do you think it's likely that we will see Saudi officials perhaps pressuring the OPEC Plus group to extend or deepen production cuts and improve compliance in order to keep oil prices well supported as we come into this mega IPO?
So the OPEC meeting that's coming up in December, the House view is that the meeting is likely to reaffirm the group's commitment to the cut that's already in place. So the current deal will remain in place until the end of Q1 next year, and we see scope for the deal being extended until the end of next year. There also has been talks about whether a deeper cut is in the line, whether it's a possibility or not. At this moment in time, we don't see much scope for that. Reason being, one, there is still varying levels of compliance between individual states. Most of the cuts that have been made so far have been shouldered by Saudi Arabia and to a lesser extent Russia, so that will be an obstacle going forward. Secondly, there is also varying levels of tolerance between individual states. How much are they going to potentially sacrifice oil-related revenues for the sake of supporting the market?
Do you think Saudi Arabia, as the swing producer within OPEC, might move to perhaps deepen its own production cuts then if it can't rely on improving compliance from members within OPEC Plus?
Well, I think Saudi certainly has the will and capability within its scope to lower production if need be. But what we have seen from Saudi Arabia so far is that they have already been shouldering the bulk of the cuts. If they were to cut production further, then they are sort of giving up this spare capacity that they have on their hands, which again exposes them to further price fluctuations down the line. So it remains to be seen how far Saudi Arabia is willing to go in terms of supporting the market. But as things stand right now, we are not factoring in a deeper OPEC cut that will be coming into play next year.
What's that going to mean for the outlook for oil prices then over 2020? We, of course, heard from OPEC earlier on this week. It said, you know what, 2020 might actually be a little bit better than 2019. Do you believe them when they say that?
So Fitch Solutions has recently published our monthly oil price outlook. In it, we are expecting oil prices to see further declines next year and the year after that. So oil's on track to average about $64 per barrel this year. We are expected to see $62 on an annual average basis next year and $58 in 2021. A lot of this has to do with the continuation of demand-side worries that we have already seen sort of come to dominate the market this year. So in 2019 alone, we have made downward revisions to the growth of several large economies around the world, including the US, the Eurozone, China, for instance, which also happen to be significant oil consumers. And we don't see the downside pressure on these economies subsiding anytime soon. And also, on the other hand, you have the small matter of escalating US-China trade tensions, which again is a highly negative aspect for oil demand and sentiment.